Market Journal, television for agricultural business decisions, is a presentation of the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources. Promotional support is provided by the Nebraska Farmer Magazine.
Hello everyone, I'm Troy Moling, and thanks for joining us today on Market Journal. We are about a quarter of the way through 2021, if you can believe it, and we've got lots to talk about on this week's show. And we're beginning our broadcast today with cattle markets, and according to Oklahoma State University livestock marketing specialist Derrell Peel, so far in 2021, fed cattle markets have seen ample supplies and a narrow trading range for several weeks. Additionally, crowded feedlots have contributed to sluggish fed cattle markets. However, there is optimism moving into the second quarter of 2021 and on. I spoke with Derrell about it earlier this week and began by asking how the continued drought is impacting the markets.
On a longer term basis, depending on where you are, we've either got too much moisture in some cases, pretty wet conditions, but we've got an awful lot of the country that's still very, very dry. And we're getting down to kind of where, the next month or 6 weeks is going to be a pretty critical period to see how, how things are going to go in terms of that spring, spring green up, spring growth. If we don't get, the initial burst of spring, if you will, we could see some significant impacts in cattle markets as we start a year in a drought, and that could force some decisions on the part of producers here pretty quickly.
What are some of those major decisions producers are going to have to be thinking about?
Well, if producers, a lot of areas were dry much of last year, so they've been through drought. If they made it through the winter, they've probably used up their hay at this point, not a lot of forage to work with. And so, again, a spring drought is particularly critical in terms of how quickly things develop in terms of the need to make decisions. And so we could be looking at some liquidation in some cases or movement of cattle, but probably, in a lot of areas we might be looking at liquidation, and it could be at a level where we would see some broader market impacts. I don't think we saw much of that last year, even though we did see some limited liquidation of cattle at the end of last year, but as we go into this year towards the summer, we could see some enough movement that it might actually show up noticeably in the broader market.
So Derrell, if things are a little touch and go now, could we maybe see that start to turn around in the coming weeks and months?
Well, in general, cattle markets have a fair amount of optimism built in them going forward in the year, particularly the second half of the year. Kind of across the board, you see a fair amount of optimism, and that certainly shows up in the feeder markets. Feeder futures for the fall are actually quite strong, and we've seen very strong feeder markets this spring, really on the lightweight side, sort of the grazing demand for stocker type cattle. But obviously the feeder market is going to stay very closely tuned in to this feed market. And what happens there, where I think feedlots are still kind of pricing in the impacts that we've seen of the higher feed prices we've seen. We're probably not fully reflecting those yet, but we will over the next 2 or 3 months. But that feed market, I think, is got the potential to swing sort of one way or the other, depending on what happens with crop conditions and weather conditions this spring. So the feeder cattle market is going to stay very tuned into that, it will react accordingly depending on what happens in this feed grain market.
Next up, Derrell, we have a viewer question for you this week, and for anybody watching, you can email us or post your questions for our analysts on social media. The viewer today is asking why the June live cattle futures are higher than the April futures, and if you can shed a little bit of light on that for us.
Yeah, you bet. The fed cattle market has been a very unusual situation this spring. We've been looking for a spring rally, through the first quarter, and it's just failed to materialize. And cash fed cattle prices have been flat for about 6 weeks. And so we've got a weaker than normal cash market right now. We've been struggling with ample supplies, heavy carcass weights, just kind of, working our way out of some of the carryover really from last year in the first part of this year in these fed cattle markets. And so as a result, we're currently significantly lower than we sort of anticipated we would be. And that has led to these April live cattle futures being, at about the same level as June, with June actually a little bit premium at times. And the viewer's absolutely right. Typically in recent years, there would be a $6 to $8 discount on June relative to April. So the problem here is not, is not particularly June. It's the fact that April has sort of had to come down to reflect this weaker than expected spring market. And we're still looking for a little bit of rally. April is actually at a little bit of premium to the current cash fed cattle market. So we'll see if that happens here in the next 2 or 3 weeks. And then, as we go forward, June reflects the fact that we still expect to see fairly strong prices from June on. And certainly in the fall contracts, we see that optimism sort of built into the live cattle market.
Thanks to Derrell. And we've got a couple big stories making news in the grain markets this week, too. This is all in advance of next week's big USDA report. Author and analyst Elaine Kub joined me this week to make sense of a couple things that could impact your bottom line. Elaine, I want to talk to you about this article you wrote for DTN, How to Handle Inverted Old Crop, New Crop Spreads. So explain to us what we're seeing with the spreads and why that's important.
Well, we may or may not still see prices move higher, but the interesting or the rare thing that's happening is that the deferred prices are lower than the current prices. Typically, in an annually produced commodity market, there's carry in the market to reimburse people for storing that grain. So higher prices 3 months from now than you have today. And that's not the case. Things are inverted. The market is screaming for the grain. It says that it wants owners to bring that grain to market and not to store it. But that makes sort of a frustrating scenario for farmers that are looking at the new crop, right? If you have old crop corn at $5.40 cash, but new crop corn at only $4.50, it feels, very frustrating and unfair. Why can't I sell my new crop grain for this higher price that's available now? But, it doesn't matter how much grain we're going to produce in 2021. We may have 17 billion bushels or whatever the number may be. None of that corn can come to the market today to relieve the supply pressure that the market is feeling. So there's just really not a lot that anybody can do about to bring today's prices forward to the new crop marketing.
The record high inversion happened in the summer of 2013. Do we know how extreme things could get this year?
That's right. When spreads are inverted like this, things get wild. When spreads are in a normal carry, you kind of know that spread is never going to get more than 8 to 10 cents. But when it's inverted, it could do anything. And you're right to think back of the summer of 2013. The futures market was inverted. I think the high was $1.93 per bushel from the old crop futures to the new crop futures. Old crop futures were $6.85 and the new crop futures were $4.90. So something similar could happen now. I mean, our inversion is 80 to 90 cents, but it can trade wildly, 10 cents different any given day, because these are two separate markets and they're just really not really attached to each other from a supply and demand perspective. And also keep an eye on basis. I think back to that summer of 2013 timeframe. It wasn't just the future spreads that were wild. It was really hot basis trying to get that old crop corn to the market.
What's the best approach to marketing that crop?
Well, for the person who still has old crop corn to sell, or old crop soybeans for that matter, which is also inverted, I mean, this would be a fun scenario for them to sit and see what happens this summer. But for folks who, and this I think is the majority of farmers, who have already sold out of old crop and are only able to focus on new crop marketing now, it's harder and it's more frustrating, but I think you have to just remember that these are two separate markets and not to get too tied up in whatever the benchmark price is today. This is a totally separate market, and it's hard to do. It's a cognitive bias, it's a psychological trap not to let yourself be influenced by today's prices, but we need to be thinking about the new crop market. And there are reasons to be bullish. There's drought across the Western Corn Belt. There's not ideal growing scenarios to get us going in the spring. So there's reasons to be bullish, but I hope that the reasons people are bullish are not seeing this $5.40 price tag on old crop cash corn.
Okay, Elaine, I want to switch gears now and talk about fertilizer prices too. Why are we seeing such big increases in that area?
Well, it could be a lot of reasons. I mean, one, there's just this expectation that we're going to be pushing a lot of row crop acres, record high row crop acres when you look at corn and soybeans combined. Of the 92, maybe 93 million acres of corn, we'll see what the intentions report says on March 31st, plus 90 plus million acres of soybeans. So together, that creates a lot of, legitimate demand for these fertilizer prices. But also there's this scenario, you could have some sort of COVID logistics going in there. Who knows? It's just sort of the hype of that market.
Fortunately, though, most folks locked in lower prices or prepaid for that fertilizer ahead of time, right?
Yeah, so prices have been churning higher and higher. I think this is the 6th straight week that we're seeing higher fertilizer prices. Anhydrous is $670, starter is $590 something per ton, and they're churning higher $20-40 a ton each week. So, if you're trying to lock in prices now for the spring, that's a problem. But I think there's evidence that the co-ops and other agricultural suppliers saw a record high amount of pre-inputs paid for last fall because we had good crop prices at harvest. Folks had cash that they were willing to put down for the 2021 marketing year. And of course, your mileage may vary, but I think industry-wide, I don't necessarily think that we're going to see a huge problem from these higher prices that we're seeing this spring, because I think a lot of these prices were locked in back last fall when anhydrous was more like $420 a ton.
And finally today, big USDA report at the end of the month. Give us a preview.
Yeah, you look back in history, and I cannot tell you whether a March 31st report is going to have a bullish or a bearish reaction. There's equal likelihood, right? But I can tell you with some confidence that it usually is a relatively big reaction. The market does tend to move 4 to 5% that day and continue to be either higher or lower a week later. The exception, of course, was last year when the corn market didn't really move at all after the March 31st report. So, like usual, Troy, it's up, down, or sideways.
Next week, we'll be joined by Jeff Peterson of Heartland Farm Partners for a breakdown of that USDA report. Next up, chickpeas, sometimes known as garbanzo beans, started to gain traction with Nebraska producers in the early 2000s. And over the last several years, interest in chickpea production has been on the upswing. However, a disease called Ascochyta blight is posing a challenge. Market Journal's Bill Dodd spoke with Extension Plant Pathologist Bob Harveson to learn more.
In the years leading up to the COVID-19 pandemic, chickpea production was on the rise due to an increase in public demand. While Nebraska exceeded 2018 projections of 12,000 planted acres, Nebraska Extension Plant Pathologist Bob Harveson says Ascochyta blight is one of the main reasons many producers in the state are hesitant to take a chance on chickpeas.
The interest has kind of ebbed and flowed in the last 20 years. There's been times where it's sped up and there's a lot of acreage, and then it drops off because and honestly, I think one of the major reasons is this particular disease of chickpeas called Ascochyta blight. It really is one of the most aggressive diseases I've ever seen or ever worked with when all the times are right. And so people became discouraged about 2000, 2001, something like that. There was a big urge in trying to do this. And then this disease became evident, and it discouraged people. They just quit growing it because there was very little that we could do. As a matter of fact, I had to get like a Section 18 to use fungicides on that because it was so new. Over the years, it's done the same thing. It's kind of ebbed and flowed, and interest we're up again right now.
Bob tells me genetic resistance will not be enough to control the spread of spores, and until Ascochyta blight is effectively controlled, acreage in Nebraska will remain sporadic. As such, he's been working to develop a solution to the challenges posed to producers by the disease, and if you are planning on planting chickpeas this year, there are a few things you should know about this particular fungus and what to be on the lookout for.
When the temperature in the summer gets up to above 90 degrees, then there won't be any Ascochyta. It pretty much shuts it off. It likes to have a lot cooler weather than that, and it takes really wet conditions to spread around. And then it's just thousands and thousands of the spores. And so then any kind of mechanical movement or rain movement, wind movement, they can go, and that's how they spread around. And so then each one of them then potentially can germinate and start the thing all over again. And what you need to be looking for are concentric lesions on the pods or the stems or the leaves that look like a target board. There'll be concentric rings. And so then if you look at that with a hand lens, you could see looks like little tiny grains of pepper. And each one of those is one of the structures that all the spores come out of. It produces the spores. And so that's the sort of thing to be looking for. And you really don't it's once it really gets going, it's very difficult to manage it because of it's so aggressive and our limited fungicide use. But in the meantime, if people are going to continue to grow, we need to find alternate options for this. But what we have found from this work is that just having genetic resistance with this disease is not going to be enough. It's going to require some other type of chemical product or some other option, and have them working together in conjunction, because one by itself just shows you how nasty this disease is.
Bob's team has recently been awarded a USDA Specialty Crops Block Grant for a planned 3-year study set to begin this year. The purpose of the study will be to evaluate new products and their ability to manage Ascochyta until cultivators with acceptable genetic resistance are available to producers. However, this will require a lot of data, and Nebraska producers could be tremendously helpful on that front.
And that's an interesting point, that we would like to try to find collaborators that are interested in us so we can try to do the same study in one of their fields. And so if we can have several different ones going on at the same time, then we have a higher chance of obtaining really good data if it's distributed. It's just to make the higher number of observations, essentially. And yes, I would like to do that. I have spread the word about it, and I'm sure we can find several people who would like to have us. We would just have to go into a certain part of their field and stake out our plots and so forth, so we wouldn't be using up a whole lot of the space or their yield, but it's just in their field under all their conditions too.
As things gradually get back to normal after the COVID pandemic, chickpeas could be a crop potentially on the rise. And you could be in on the ground level of research that helped chickpeas be a more established part of rotational practices around the state. Reporting for Market Journal, I'm Bill Dodd.
Thanks, Bill. If you're interested in taking part in this chickpea study, head over to the Market Journal website for more information. Next up, in the late 1980s, Nebraska Extension forage specialists traveled around the state demonstrating a new, cost-effective, rapid way to test forages for quality. The mobile near-infrared spectroscopy was just becoming more widely accepted by farmers. Over the years, this technology has evolved and is now available through private laboratories. Experts say this analysis helps the forage producer gain insights about what they can do to improve, and the livestock feeder learns about how animals might perform consuming the particular forage that's being tested. You can learn more about the evolution of forage testing in the March Nebraska Farmer. Time now for weather with Nebraska Extension Ag Climatologist and Market Journal Chief Meteorologist Al Dutcher. Al, we're staring down the beginning of April, and the forecast is especially important this time of year. What can you tell us?
Well, Troy, you're right. We are getting ready to move into April, and it's that time we start to see the planting take progress across the state, ramp it up, and this last month of March has been extremely wet across a good portion of the eastern two-thirds of the state. In fact, when we look at the anti-rain network, and this doesn't include the precipitation totals that started from yesterday through this morning, we're looking at a couple areas of the state, particularly around Juanita and around Hastings, where, at least from the anti-rain network standpoint, 2 observers reported at Juanita close to 12 inches of moisture, just shy of it, and we're just shy of 11 inches in the Hastings area. And when you look at the widespread number of 6+ inches across the state, it encompasses almost all the central and eastern Platte Valley, extending plus or minus a good 60 miles either side of the Platte and I-80 corridor. So we've got some really substantial water here the last 10 days, and we really need to see some drying, at least for temporarily before a return to moisture, so that we can get some of that moisture worked down and get these surfaces dried out enough that we start doing some farming and getting the planting going. So overall, it does look like the opportunity is there for a little bit warmer conditions and maybe some drying before we turn our attention a little bit later into the month of April for some more active weather to develop. So let's go to the upper air models and see what we have in store. And the trough that was coming through from the central Rockies brought the precipitation overnight hours and moved it through the state. Most of that energy is now passing to the east of us. So we'll have this cooler conditions in store for today. Even though it's a little bit warmer than we've seen this week, it's still going to be primarily right around average. As the main precipitation moves to the east and most of the light snowfall activity remains up in the Dakotas, this system intensifies as it pushes to the east of us and pulls that cold air down over the Great Lakes. In the meantime, we'll see warming starting to build up in the western high plains, and that will spread across the state as the day progresses. Tomorrow, we should easily start to see temperatures moving in the upper 60s to the low 70s as we get in the afternoon hours with the snow staying to our east. By the time we get to Monday, there is a GFS model at least showing some colder air moving down in the region. It might be just a tad bit fast. Even though low pressure looks like it's going to set up at the surface, we're going to see a big long fetch of warm air coming into our region. So I think we're going to see widespread 70s across the southern half of the state and definitely upper 60s across the northern part of the state. And on Tuesday, the cold air comes sweeping through, and timing becomes an issue. If it comes in early, then we're not going to see temperatures make it to the 60s across the south. Comes in later, then we definitely will. 50s out west, high pressure slides in, but most of the moisture with this is going to stay to our east, so just some light flurry activity across northeastern Nebraska. As that system moves toward the eastern United States, we start to see ridging building up. Much warmer conditions start to build back into the central plains with high pressure firmly in control to the southeast east of us. We'll bring in some southwesterly flow at the surface. We still do see a little bit of moisture down in the southern Rockies with this weak wave, but right now it looks like it's going to pass to the south of us, and for us we will see basically a westerly flow with the northern jet. That brings downsloping flow conditions across western Nebraska and much warmer conditions, and that will spread toward the east as most of the precipitation right now is expected to stay south of us. If this moves a little bit farther north, then we'll deal with a little bit more precipitation next Thursday. Then as we get into Friday, another piece of energy tries to make in the southwest and the southern stream and lines up a bunch of low pressure systems that will start to push energy out into the southern plains. That will start to generate some moisture to the east of us and possibly over the central Rockies, and we'll watch to see whether or not this takes a northeastward trip like the last two major storms that hit us here during March, or whether this progresses eastward. That will determine how wet we are next weekend or if we remain dry with a warming trend. As we look out farther, from the standpoint of the numerical models, they believe we're going to see above normal temperatures as that trough builds into the western United States, but they also indicate very strong dry conditions. I think that might be a little bit overdone on the southern half. Do look to see a better chance of precipitation, particularly the second week of the month. So overall, very nice conditions for this next week.
Thanks, Al. Finally today, according to the preliminary findings of UNL's 2021 Farm Real Estate Market Survey, the value of the state's agricultural land increased by an average of 6% over the prior year to a statewide average of just under $2,900 an acre. This follows a 3% increase in last year's report, which was the first increase since 2014. Nebraska Extension educator Jim Jansen is one of the survey's authors and stopped by to talk about the most recent data.
Yeah, so from 2014 to 2019 in the state of Nebraska, we've seen a gradual decline of around 20% over a 5-year period. If everybody recalls, 2012 to 2014 was a period of time in which we had very high commodity prices. Starting in 2020 as well as 2021, we've seen the average value of farmland increase about 6% over the last year. The year prior to that, 3%. So in the last few years, we've seen land gain about 9% or an average around 4.5% a year. The estimated market value of land in Nebraska, if you account for all the different types of land, is roughly $2,895 an acre, which is up 6% February 1, 2021 compared to February 1st, 2020.
What type of impact, if any, did the pandemic have on land values?
So over the last year, we've seen a lot of different things happen in the Nebraska agricultural economy. COVID-19 caused a lot of issues with commodity prices, processors. We have many of those in Nebraska as well. We've seen a lot of differences in prices. The pandemic has caused the Federal Reserve for the United States and also impacts the state of Nebraska to lower interest rates. The cost to borrow money to finance and purchase long-term debt is a very low rate right now, historically low. Also, in addition to that, to combat the pandemic, there has been around about $2.4 billion paid out in different forms of disaster assistance by the USDA. The two biggest programs last year were the Coronavirus Food Assistance Program, or the CFAP program. With that program, we've seen they help stabilize markets with that assistance. And then one of the other big factors last summer, around June, or maybe even in early July, we've seen commodity prices really kind of bottom out. And since then, when we entered very late summer, fall, we've seen prices start rising, especially after the first of the year here. We had a late season run up in the market value of many of the row crops and small grains that we raise here in Nebraska. and helped, for those folks that hadn't sold their grain, it really helped them recover in the prices. So in summary, what COVID has done to our land markets, it has introduced a newer level of government assistance we haven't seen at this magnitude in several years, higher commodity prices for mainly our crops, as well as low interest rates, which cost to purchase and go out and buy a house or land or anything is very, very low right now.
What are some other concerns that landowners have that were addressed in this report?
So each year we monitor a set of what we refer to as economic forces that impact farm real estate values across Nebraska. In prior years, things like the commodity value or livestock prices were a negative force weighing down on land values because they weren't as good as what they might be right now, especially on the crop side. Other areas of concern have been things like property taxes or future property tax policy, which is an area that's currently being debated at the unicameral and a very hot issue in public policy matters. And so our survey will probably reflect some of those concerns by landowners across Nebraska. I would just say anytime you're in a very dynamic state, it's somewhat hard to negotiate things like cash rent, because what will be the price of corn or soybeans or cattle here in the fall of 2021 after they're done grazing land or you're done producing those. So I think one of the biggest concerns is from landlords and tenants are setting an equitable cash rental rate that reflects the market prevailing, taking into account drought, rainfall, exports, everything. What truly will be the value of what we're going to be producing or growing this upcoming growing season.
Head over to agecon.unl.edu/real estate to read the full report and get a complete breakdown of the numbers. The final report will be out in June. That's going to do it for this week's show. If you missed a story, be sure to download the Market Journal mobile app or follow us on social media to join in on the conversation. And don't forget, you can get the latest updates on the fight against coronavirus at covid19.unl.edu. Hope to see you right back here next time. I'm Troy Moling. Thanks for watching.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Twitter, Instagram, and Facebook. Promotional support is provided by the Nebraska Farmer Magazine. Market Journal is produced by the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources.